I'm Dennis Lee, Associate Portfolio Manager at Morningstar Investment Management. Welcome to the Morningstar Market Minute, a video series every Friday where we take a quick look at markets, the economy, and how we position our portfolios. Let's start with the inflation report here in Australia. CPI rose 3.8% year on year in October, higher than expectations and September's number. That keeps the pressure on RBA and takes the hope of rate cut off the table. The hotter than expected inflation also sent the 10-year bond yield touching 4.5% again. Aussie equity slightly bounced back this week by 2.5%, driven by materials and healthcare sector. Turning to global equities, we see market gyration have continued due to a couple of uncertainties. The first uncertainty is whether the Federal Reserve will deliver a rate cut at its final meeting this year. According to CME FedWatch, the probability was roughly 50-50 last week, but after some dovish comment from the Federal Reserve, markets are now pricing in over 80% chance of a December cut. The US stock market has since recouped half of the losses that occurred in November, and bond yields are now coming down. The second uncertainty is around tech valuation. Nvidia delivered another solid result. However, the share price has fallen as much as 12% this week after the initial post-earning pop. It reminds us that while the business fundamental can be exceptional, but when a stock is priced with very little room for error, then if anything does not go as the plan, the market will quickly become punitive to the price. Another worth mentioning is concentration risk. Nowadays, investing passively in the index comes with less of a diversification benefit than many people assume. Top 10 companies now account for more than 40% of the total market cap in the US, and many of them, the returns are also highly correlated. The problem with high concentration is that if one or more of these names get stumbled, the overall index can experience a painful drawdown. Our view is that building a robust portfolio and remaining diversified is crucial in the current environment. For our portfolio, currently we're finding more attractive valuation in the defensive sectors, such as selected names in consumer staples and healthcare. You can find out more in our Morningstar 2026 Global Outlook Report, which is now available. Thanks for watching Morningstar Market Minute, and see you next Friday.
Any advice in this video is general advice prepared by Morningstar without reference to your objectives, financial situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.